In this video, I'm going to teach you the best trading strategy in 2026. I personally developed this strategy and backtested over thousands of charts. And now I will show you how to apply to the price chart step by step. Our first chart is General Mills. For this trading strategy, we need two indicators. The first one will help us see the monthly opening days. Here is my settings. If you want to see yearly, daily or weekly opening days, you can also select them. But in this trading strategy, we only need monthly opening day. So let's go to our second tool. Most of you already know this. Our second tool is MA ribbon. Here is my settings for MA ribbon. I choose exponential moving average called EMA. Time frame should be daily, and for this strategy we need 20, 50, 100 and 200 daily EMA. Let's close also this one. Now I will show this first indicator. When you enable it, it will show you these green lines. These green vertical lines indicates first day of each month. Here is how price works. After a new month opens, first price run towards liquidity pools. When it collects enough liquidity, it goes to opposite side. So this green lines help me see the time slot that we should be looking at. And now I will also enable our second indicator, MA ribbon. So let me remind you once again, the green line is 20-day EMA. The yellow one is 50-day EMA. So the blue one is 100 and the red one is 200-day EMA. Let's play our chart a little bit. So why do I use exponential moving averages? Usually I don't trade indicators. I don't look for any signal that comes from indicator. I use these indicators because I want to see where retail traders are clustered. When price is moving further away from moving averages, at some point it will come back to these moving averages. For example here, if February started, price pushed down, take this previous low's liquidity and started going up towards 20-day moving average. As I said, when new month starts, first 10 to 15 days, price goes to liquidity pools. It hunts the liquidity, then goes to opposite side. But the question is, the liquidity that price collected right here is enough for strong bounce, or price needs to collect more liquidity below this low. So I want you to pay attention to this. Price is making lower lows and lower highs. And also here. Since we are in downtrend, I would like to see more manipulation below this low. Let's play our chart again. Here is our manipulation candle. After price retest this green 20-day moving average, it dropped almost 10%. Let's play a little more. As you can see, this last push was manipulation because price got rejected right here and had huge reaction to the upside. Now I'm looking for a long entry. If price comes down a little bit more, I will be buyer. Let's play more. Okay, now I can be buyer right here. But the other question is, where is my target? Where price is likely to reach? I have great method for defining the target. So let's say last 12 months, where is the high and low? Our high is right here and our low is where previously we got reaction here. Now I will accept this as my range. I will use Fibonacci tool to define 50% of our range. So let's drag from high to low. As you can see, 50% of our range is right here, 0.5. I can also show you my Fibonacci settings. I only use Fibonacci tool to define the range. So let's close this one. So this one is upper part of my range and this one is the lower half. Now I have two range. The first one is upper half. The second one is the lower half. I will drag one more Fibonacci to the lower portion of our range. Let me clean the chart a little bit. So here is our 50% of second range. So the logic is, if price goes above this 0.5 level, it will aim second 0.5 level, which is right here. Let's take long position right here. Our target is 50% of the range and our stop loss point is previous low. So this trading setup has 1.42 risk reward ratio. I highly suggest you to not play with your stop loss to increase this risk reward ratio. This stop loss point is supposed to be at previous low. Now let's play our chart and see. As you can see here, we hit our target. So what happened? So price exactly moved as we described. Here February started, pushed price down, took the previous low's liquidity, complete manipulation here by regaining the level that has lost previously. And I want you to pay attention to this. Before price started this strong move, it was below all these moving averages. So let's see another example. So here is our second example. I will enable my indicator to see each month's opening day. So here is our February opening. Let's play our chart and see. So as you remember, first 10 to 15 days, we need to see some manipulation in price chart. Here after February month started, price took this previous low's liquidity. I will now enable moving averages. And here is the other sign. Price is below all these moving averages. The logic is when price moves further away from these moving averages, it tends to come close back. If price is so much lower than these moving averages, it means it is oversold. If price is so much higher than these moving averages, it means the price is overbought. So here we see first manipulation in price. But since this is a downtrend, I know that I shouldn't be in a hurry. I should wait for price to give me confirmation for the upside. Let's play a little more. As you can see, price got rejected 2 times here. We are below all these moving averages, and below this low, price tried to go down twice here and got rejected. Now we can define our target. So in last 12 months, our specific high is here and our specific low is right here. I will take this as a range and define the 0.5 level from this high to this low, and I will also measure the lower portion of our range. Let's zoom in. So our first setup can be here, and our second setup will be like this. And let's play our chart. So as you can see here, we hit all of our targets. So let's go to our next chart. We will apply exact same strategy on this chart. First, we will define opening day of each month. Then we will check exponential moving averages. So we are below all these moving averages. Here, January month started, price pushed down, came right up until 20-day moving average, got rejected and making sideways right now. So here is very interesting. This is our specific low. In previous month here, price had a first attempt to go down, got rejected, and in January cleaned this previous low's liquidity. And we are below all these moving averages. So as I said, this price is oversold. Since we cleaned this sell side liquidity here and we are below all these moving averages, I can set my target. So approximately last 12 months, our high is right here, and the low is here. Since this is a downtrend, I don't aim this previous high or this one, but I can aim right here, 0.5 level, because this is the most rational target that you can set right after this manipulation phase. Aiming this high or this high wouldn't be logical because price is on a downtrend and making lower lows and lower highs. So let me show you our long setup. Our entry must be at this point, our stop loss should be below this previous low, and our target is right here, 0.5 level, which is 50% of this last range. Let me zoom in and I will play now. As you can see here, price hit our target perfectly. Right after this point, because 50% of all ranges are important. Keep that in mind. You should always pay attention to 0.5 level because 50% of all ranges are algorithmically important. Price always remember this equilibrium point. Make sure you apply to your chart and backtest it. See you next time.